Hey everyone, welcome back to Corporate Decoder, the place where we look at company fillings to see if they're a good investment or just a bunch of hot air. We've got SOBR Safe Inc. on the chopping block today, and let's just say things could get interesting if they have to do a reverse stock split, which isn't exactly a vote of confidence. Before we dive in, do us a favor and hit that subscribe button and ring the notification bell so you don't miss our future breakdowns. And hey, if you're looking for a community to discuss all things stocks and finance, check out our Discord server linked in the description below. So, for Safe Inc. They are reporting on their annual meeting held on July 17th, 2025. This is a company that focuses on alcohol detection systems for vehicles, meaning they want to prevent drunk driving, which is a noble goal, but how are they doing financially? And what do their shareholders decide? Let's decode this filing. The main event here is the company's annual meeting, where shareholders vote on important company matters. Like any company, SOBR stock needs to be traded somewhere, and they're currently listed on the Nasdaq Capital Market. Now let's get to the nitty-gritty of what happened at that meeting. 5 proposals were put to a vote, and all of them were approved by the shareholders. First up was a change to the company's bylaws. This means they're structuring their board of directors differently. They're going with a staggered board. This is where directors are elected for different terms, so not all board seats come up for election at the same time. It's often done to provide more stability and continuity to the board's decisions. Looking at the vote for this bylaw change, the vast majority of shareholders who voted were in favour. That's a strong signal that they're comfortable with this structural change. Next, they elected their directors, and these are the people who will actually run the company: Chris Peterson, Sandy Shoemaker, Stephen Beerbout, Ford Fay, and David Gandini were all elected to serve different terms. This aligns with the staggered board structure we just talked about. The voting numbers for the directors are quite positive, with a large majority of votes cast in favour of each candidate. This indicates shareholder confidence in the individuals chosen to lead the company. Then there's the equity incentive plan. This is essentially a way for the company to give stock or options to its employees and executives to motivate them. They've increased the number of shares available for these awards, which is pretty common as companies grow or when they want to retain talent. While approved, this proposal did see a more significant number of votes against it compared to the board structure or director elections. This might suggest some shareholders are a bit wary of diluting their ownership through more stock awards. Now, this next one is a big deal proposal. Number 4 is about a potential reverse stock split. This is where a company reduces the number of its outstanding shares, but the total market value stays the same. It's often done to boost the stock price per share, maybe to meet listing requirements on an exchange like Nasdaq, or to make the stock appear more substantial to investors. The shareholders gave the board the power to do this if needed. This proposal received a lot of votes for it, but also a considerable number of votes against it. This tells us that while the need for this might be understood by many shareholders, there's also a level of concern about what a reverse stock split could mean for the company's perception and future performance. Finally, they approved their auditors, Haney and Company. This is a standard procedure to make sure the company's financial statements are checked by an independent firm. Beyond the votes, the company also presented some slides at the meeting, which are included with this filing. While the filing doesn't give us the details of the presentation itself, it's usually a summary of the company's performance and future outlook. And the report is signed off by David Gandini, the Chief Executive Officer. This finding primarily concerns the administrative and governance decisions made at the annual meeting. It doesn't contain detailed financial results for a specific quarter, but provides insight into shareholder sentiment on key corporate actions. Now, for our take on SOBR Safe Inc. based on this filing. The company is actively managing its corporate governance and responding to its listing requirements. The approval of the staggered board and the directors indicates a stable leadership structure, but the potential for a reverse stock split is a significant point of attention. A reverse stock split is often a sign that a company's stock price has fallen to a level where it might be delisted from major exchanges, or it's seen as too low to attract institutional investors. While it can help meet listing requirements and make the stock appear more valuable, it doesn't fundamentally change the company's business or its market capitalization. The significant number of votes against it suggests that some shareholders are viewing this as a potential red flag rather than a positive strategic move. The company is trying to prevent drunk driving, which is socially beneficial. However, for investors, the key is always profitability and growth. The decision to increase shares available for equity plans suggests a need to incentivize employees, which is normal, but the vote split here bears watching. Without seeing their actual financial statements, we can't make a deep financial assessment, but this filing tells us about the confidence shareholders have in the company's management and its strategic direction. The approval of all proposals shows a general alignment, but the debate around the reverse stock split highlights a potential underlying concern about the stock's performance. The company needs to demonstrate strong growth and profitability to justify a higher stock price organically rather than relying on a mechanical adjustment. So what's the takeaway for SoSafe Inc? They have a clear mission, but face the challenge of translating that into robust financial performance. The management seems to be making necessary governance moves, but the market's perception of a reverse stock split could be a hurdle to overcome. Investors should keep a close eye on their upcoming financial reports to see if the company can deliver consistent growth that supports its stock value. Right, that's our breakdown of SoSafe Inc.'s latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.